All right, everybody, check this out. We missed our strategy call yesterday. I talked to a few people, and based on the strategy inputs that I put in a couple days before, you've probably taken some trades, so I'm hearing panic. Today's video is gonna go over the trades even I'm in, and I'm gonna tell you why I'm not panicking. First of all, you're trading these things to diversify your portfolios, okay? You're spread trading, you're doing future commodity spread trades to diversify your portfolio. I don't care if you're doing it with the $3,000 account. I don't care if you're doing it with the $300,000 account. You're doing it because you probably don't have the time to sit in front of a screen. You're not trying to day trade. You don't have time for that volatility game. You're not trying to play. But yet sometimes still, because you're playing with an expensive contract, you might not have enough experience and be able to take a little hit, a $200 swing or a $400 swing up. And even though we teach you in the boot camp how to handle these seasonalities and how things get a little overextended, you go into a panic mode. So I'm here to tell you, the reason why you're probably going into a panic mode is you're doing too much. You maybe didn't do enough paper trading, which goes against one of my principles that I tell you guys, don't do this too much. You gotta do and implement what I'm telling you enough times to feel okay, but don't dive in and live in this world. You gotta put skin in the game. And I tell some of my betas this, they never even paid for a course, and they get, I don't know what happens, I lose them here. The ones that have been paying, what we've been getting is, they're working, they're trading. But you haven't been doing it enough. You need to just do it, and you need to know, and after you keep doing it, you'll know what I'm talking about. So we're right now, let me slow it down a bit. Let me slow it down a bit so it makes sense. Because I'm in these trades live with my own money, so I can talk about it. We're in a couple bear spreads, okay, right? What does that mean? That means that our front month, on our contract, on our futures contract, we're short. And on our back month, on our futures contract, we're long. Very simple. Bear spread. Vice versa, you're in a bull spread. There's nothing tricky about it. It's not like options. There's not a lot of whole strategies and weird Greek words behind this. It's not. It's simple, right? We talk in the boot camp how to put that on. Right? Some of you guys that have personal coaching with me, I teach you personally. Now, I'm going to show you, I'm going to try to illustrate an example of, of this bear spread we're in on corn. Let's say our algorithm is telling us it's a good seasonal spread to come in right at May. You see a pullback come in. And red is a 5-year or whatever. I'll do a green line here that's saying it's pretty much almost correlated, but it comes down like this. Maybe this is more, because it's more recent. It's a 5-year statistical. It's a little bit more higher, it's a little more stagnant. Our blue line is going to be our 15. I'll try to use this one as 20. Now, here is the black line is your current line, your present line. And it's come here, like I said in these videos, and it pulled back into this area. And some of you guys started selling and being all excited and all that stuff, looking forward to this move. It hasn't even tried to start yet, and you guys are panicking because this thing popped over this much, this little stretch. And this little stretch has cost you per contract about $150 to $175 so far. You got to ask yourself within yourself. Now, historically, this thing has an 80+% chance of doing its thing. You've already probably taken a trade or two. What are you afraid of now? Why are you panicking? We've gone through this last month with our hog spread when I was in Miami. We've gone through the same thing. What is causing that is your front month speculators, your front month headlines, your front month problems, your front month weather issues, drama. Doesn't matter whatever you're trading energy. Did Trump tweet something? Did OPEC talk and get crying about something again? If you're trading a grain, is there a drought? Is there a problem with too much water, which is comparable to a drought issue? That's what causes these little skews, guys. And the thing is, if you're spread trading, I don't want you living off of that damn little skew. You gotta be strong, you gotta be prepared. Okay? The stuff works 80+% of the time. If you have a statistical, historical edge, you don't gotta be smart and you don't gotta try to figure this out. Now, what you wanna do is, you'll check what happened. You know, today I got up and I figured, I'm following through, and people are whining and crying about a weather storm, and I'm in Austin, Texas. It's wet here too. A weather storm through the Midwest that's affecting corn or the plantation process, and there's a delay, and they've only gotten 15%. They should be at 34. I don't give two craps. I'm looking at that history. Because that's just a temporary noise that the front runners and the front guys in the front months are working on making their money and strategy. Believe me, I watched the whole depth of market on this corn trade today because I had a lot of time today. It's just ridiculous how they even were playing it. All they're doing is buying positions in, and you watch what's going to happen next week. Let me show you guys a quick little weather report that I got. Let me show you guys this. Here you go. Check this out. This is a 6-hour OPF of the next 7 days out here in the Midwest. Yeah, it's going to affect stuff. It's just temporary, guys. If you're spread trading, check this out. See, guys, I'm telling you, you don't have to per se, when you're spread trading, be too concerned on these little short-term little news. It's going to whip you around. Now, if you're an outright trader and you have a lot of money on the line, a lot of margin on the line, a lot of contract, it's gonna be pretty significant, and you might not feel good. But it's knowing these fundamental things, right? You're trading commodities, guys. You're trading future commodities. You're essentially, even though you're technical, some of you out there, you're still fundamentally having to make your decision. That's how people make money in this market. Nothing's changed since before the times of Egypt. Nothing's changed. You know, it's on weather. It's on some, depending on what you're trading. There's headline news. There's things like this. That's it. And if you know that, it gives you that confidence to sleep another night and just wait. I've done it enough times where I've just given profits away, and then it turned back around, and I was out of the game. I've done it too many times, and that's when the learning curve starts coming, hopefully, or else you just blow accounts out. You either learn from that, you start breaking even, and go from breaking even, you start making money. How? You get your skin in the game, you start learning how these guys play. Yeah, there's a weather coming around. A quick little headline, like 2 weeks ago, pork, yada, 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 on the hogs. They killed off 1 million of them in Asia. We never heard anything ever again. I got a couple haters out there that were talking crap. We background checked them. They were in the food industry. Everybody has a bias. Everyone's going to talk based on what's affecting their pocket and their bottom line. If you guys are spread trading, just be aware of these little things that I teach you in these boot camps. It's simple. You don't have to follow much. It gives you a little bit of confidence what's going on. I'm looking at 7 days here. I see the storm stuff might pick up. And then another thing that you do is you hedge These are already hedge trades, right? Front month, back month corn, front month, back month wheat. The corn is already hedged. Then you hedge your wheat trade. You hedge another thing into another portfolio. Sometime you might be trading multi grain contracts, so you feel like, oh, that's not that. It's in the same part of that portfolio. No, it's not. They're a whole different beast. Grain markets are a whole different beast. You have soybeans now for the last year. They've been running up on headline news from China. So it's now we have weather issues and political issues that tie to that grain. So it has nothing to do because you're trading two different grains that you feel your portfolio is in the same loop. It's not. And in fact, right now we're trading the same time that we're trading a corn bear spread, we're also trading a soybean bear spread. So I mean, and they do opposite of each other. One on the soybean is actually holding profits already now. We're up over 1.5 points, and it's mitigating the losses that are being coming in on this little weather thing you see here on corn. I mean, okay. It's as simple as that, guys. I mean, I just had to come up with that. I don't even know what else to say. I'm anticipating a really nice return on these trades we're in. We'll do another little market follow-up. Tomorrow's Friday. We'll go ahead and look at some of our trades in the late morning and go from there. Or we'll do a weekend Sunday ramp up. But again, if you're spread trading, don't let the current simple little headlines skew you away. It comes back around because there's a lot more activity. There's a lot more than you think going on with further month contracts. It's gonna help sustain that risk for you. You got to get used to it. You just got to do it. You got to jump on the horse and get used to it. We have the 5-hour boot camp you can join, and I can guide a lot of you beginners into how to enter some of these things. You just got to ask for it. That's all I got to say. It's Thursday night. For those of you not going to come back tomorrow, have a good weekend. I'll try to be back here by tomorrow and follow up on some of these trades. Okay? I want to play this little thing again here.